Good morning, Crystal. How are you today?
Morning.
Morning, Crystal.
Hi. I don't know who's talking to me, but hi.
That's Gabriella.
Yes.
Hi.
Happy Friday.
Happy Friday. Am I the only person on here? Let me see.
So far, yes.
Okay.
That's okay. You have our full attention and ask away any questions. John has a wonderful presentation on the updates. We got another person jumping in. And you have the full team here to ask any questions that you want, run scenarios, ask about current interest rates, mortgage updates. So we are
No pressure.
No, these are questions that you have already in your mind, and we're just here to provide some different options for you. So welcome.
Okay. Well, I was just anticipating to listen in, so I didn't come with questions, but I do have a listing I'm putting on the market right now. So if y'all have marketing materials you can send to me about rate options for buyers, I'll take it.
Awesome. Take it away, team.
Yeah, the rate options. Yeah, they're all over the place right now. So
Yeah.
yesterday, big swings. Definitely on 30-year fixed rates. You're looking high sixes to low to mid sevens, depending on the situation. So
Ouch.
just keeping it in perspective, I talked with a client yesterday. I locked in at 6.875%. I was like, well, just so you know, on the house that I bought, first house I bought in Florida back, I think it was 2008, might have been 2007. My rate was, I think, 6.875%, and I paid 1.5 discount points to get it. I was like, so basically, we're back to where rates were at back then. And back then, the Federal Reserve wasn't buying any mortgage-backed securities back then. So since 2008, when the market crashed, the Federal Reserve has been buying mortgage-backed securities, basically printing paper, to buy mortgage-backed securities, which keep rates artificially low. So I don't have a chart in front of me, but I would imagine since 2008, a majority of the time rates had been under 5%. I know in 2018 for a stretch, we went above 5% on 30-year fixed rates in 2018, but since 2018, definitely not. I mean, so they were in the fours in 2019 and 2020 until March or April, and then the Federal Reserve started really aggressively purchasing mortgage-backed securities at that time, which drove rates into the threes, and then ultimately into the twos for 30-year fixed rates, which is crazy.
So how does that translate into monthly payment for the buyer of the house that I'm putting on the market today?
Well, it depends on the purchase price, but I can give you an example. I had a client that was under contract to 57 days ago on a house, and I had a 4.75 rate, and the rate that they locked in at now, I believe is, I don't have it pulled up because I'm focusing on this. I believe they locked in at 6.125 or 6.25%, and that increased their monthly payment $900 per month.
Same purchase price?
Yeah, for that example, it was I think it was like a 724 purchase price. So it was something like $900 per month more.
That's crazy.
So for the same interest rate, comparing yesterday to 57 days before that, for the same interest rate, the closing cost it was either $47,000 or $50,000 more for the exact same interest rate in 57 days. So basically, the bond market, their mortgage coupons or so like they group all these mortgages together and then they sell them. So the mortgage bond market for that, it was a 4.5 mortgage rate coupon, lost 6 to 7% in value. So your closing costs are 6 to 7% more for that exact same interest rate now. Yeah. So
and I don't like any of the things that you're saying.
It basically equated to almost 2% higher in interest rates, But I went on, so I locked them in at 6.125, and I just went on to like USAA posts their rates. So I just went on to USAA rates, and this was on a VA jumbo loan. Well, they were at 7.25% rate instead of 6.125. And that was with paying 1.7 or 1.8 discount points. I think I told a couple of you all on the call about that. So we were a point less than them. So, and that generally is not the case. We're not a point less than USAA like over the years, but that just shows how wacky this market is. Pricing is, very volatile. There's, smaller lenders that are, going out of business. Now with us, we've been in business for 35 years. So Tom Van Dyke, he's been like, conservative over the years, like we're debt free, so just like in our personal lives, like, the less debt we have, the easier the more difficult times are. But, we have buyers that are getting offers accepted now, like under the list price. We're able to, negotiate for seller credit towards buyers' closing costs. And of course, that's not on every single deal, Crystal. I'm not saying that. Right. However, we have like, I have a buyer that can't do it. They've owned a home in the last 3 years. And they're not eligible for any like assistance programs. The only way that they're going to be able to buy this house, they can come up with their down payment, but they're going to need to get $6,000 paid by the seller towards their prepaids and closing costs. The buyer's agent knows it. The buyer knows that. And like, I'm not saying to the buyer, this is going to be easy and it's going to work on every property. However, if you can't come up with the extra funds to pay the prepaids and closing costs, well, then you can't buy. So your agent's just going to have to negotiate that in, and you're going to have to find the seller that's willing to do it. And that's the good news with the market, shifting some, that you should be able to get more creative. These VA buyers that are under contract, they got the seller to pay $22,000 towards their prepaids and closing costs, so they could also buy their rate down.
So that's the listing that I'm putting on the market today. I'm just waiting on a couple things to put it active, but I already had that conversation with the seller. Look, we're going to need to offer some sort of assistance to the buyers just because the purchase price and the mortgage market we're in right now.
Yeah. Now we've been getting asked questions about 2-1 buy downs lately, which we can do. I
heard about that. Yeah, but that's different than like an ARM. And so, there's other people on the call that might want to know about it. But yeah, that is far different than a regular ARM, right?
Yeah. So I have 3 or 4 ARMs in process with a portfolio investor. 5-1 ARM, which means it's fixed for 5 years, and then it can adjust up or down after that 5-year mark. It can go up no more than 2% per year. But for the first 5 years, I got one that's locked in at a 4% rate, another one that's locked in at 4.5%, and another one that's locked in at 4.875%.
That's really good. Yeah.
Yeah. So now they're supposed to be the first 2 are supposed to be closing next week. Tanya Canarte on our team has her first one closing today. The portfolio investor is old school though. Like they don't have like an appraisal portal. They don't have like a system where I can go in and see the status. They manually underwrite every loan. So we have one email address, the same email address where we submit rate locks.
So it's time intensive is what you're saying.
We need a little extra time on those. It's not a 3-week close on those.
Yeah, definitely not. So like get 45 days on the contract. I know that sounds crazy probably, but get 45 days. If you can get 50 days, like that's good. Praying, I have one that should be closing in like 37 days, but that's supposed to be cleared to close today, and they won't send their initial closing disclosure out until it's cleared to close. Where with us, we'll send the initial closing disclosure out once it's conditionally approved. But like literally, I called my account executive there, and he was saying I had a debt to income ratio issue on this one client that we worked out, but he's manually calculating it by hand. He's not even doing it like on the.
He's got his Excel spreadsheet, Shawn. Don't worry.
So yeah, they're old school. Our company has closed loans with them, but it's too good of an option not to share with clients.
So you said they're a portfolio lender. So does that mean they're only in a certain price point and above?
We can do we can do jumbo loans through them. For primary residences, people have to do 10% down. And for investors or second home buyers, they have to do 20% down. For the investors and second home buyers, the rates on that program are 5.25% on 5/1 ARMs. They don't have 30-year fixed products. So, but like for me, I mean, if I was buying a house, it's something that I would definitely consider
Yeah,
versus
yeah.
taking a 30-year fixed rate, 2 to 2.5% higher than that. The 2/1 buy down, that was really popular when I did new home sales back in 01, 02, before I got into the mortgage business in 03. Worked at MI Homes and we did FHA 2/1 buy downs. So basically what it was is, the true interest rate was 7%. However, the first year it was 5%, the second year it was 6%, and years 3 and on it was 7%. And the builders would basically just build that into the purchase price of the home to increase their purchase prices and then offer that to help their values continue to increase. Well, so the only way somebody can do a 2/1 buy down is if the seller pays for it. So the seller has to pay for it. And I believe the cost is about 2.875% to do that. So you're going to need about 3% in seller paid closing cost. Okay. To do that. Now, it actually ends up like the cost of the buy down is a little bit more than what the interest savings are. So it isn't a better deal for people. However, it may work, and I haven't done any. However, it may work out well for somebody that the husband's already working, the wife's in nursing school, she's finishing nursing school, but she won't be finished till next year. So having that lower payment for the first year could help that specific person. So there's going to be a reason for it. I haven't done it yet, but we have it available for FHA and conventional loans.
It's a buzzword right now.
Yeah. I need to do a video on one, and I haven't. All right, that's on my to-do list now.
So who do I contact at your team for I guess it's called a promo flyer with rate or payment options for conventional 5/1 FHA? Who do I contact about?
You're signed up for list reports, Crystal.
Just print it off there.
The flyers that you generate there, I don't know if I can log into your specific one for you, but can you jump in there and look at the different flyers and see what's in there?
I will do that now. Yes.
Yeah.
And then if you ever have any questions, you can email the team. Gabriella helps us a lot with the marketing pieces, but just reach out to us and we can get it done for you too.
I almost hate to put any interest rates even on a document right now because
I know, but we need that as a realtor. We need that as an idea for a buyer. Like you could purchase this home for around $2,500 a month or whatever.
Are you sure you want to show them that?
It's a general ballpark number, Shawn. I need to give them a general ballpark.
I think I ran payments on a $300,000 purchase price yesterday, and the payment was like $2,600 for the person. And they're like, $2,600. What can we do to get it down? I was like, go back in time 6 months.
There's nothing to get it down. Yeah. An agent asked me the other day that they had a buyer that needed to stay around $1,200 a month, and I was like,
you can't even get a rental for that anymore.
you can't even rent. So what do you mean? I mean, what are they?
A decent rental. Yeah.
Where are they living right now? I'm genuinely concerned.
John said he has some payments on his slides, so we can go into that. I just wanted to hit on this is in a day and age of problem solving. I feel like on a lot of our transactions, a variety of things are coming up. I don't know if Marilyn on. So Marilyn had one where she had it was a single wide manufactured home, and we had to flip it from conventional to FHA because we now know on single wide manufactured homes for conventional, they have to be built within 10 years of the note date. So the single wide manufactured home would have to be built after 2012 or later on a conventional loan.
I'm surprised you had somebody that was willing to do a single wide mobile home loan anyway, because I've always been told it's got to be double wide because nobody wants a single wide loan.
We do them in-house now.
Oh, okay.
Yeah.
They have to be less than 10 years old though. So that's
for conventional. For FHA, they can be older than 10 years old. And then there's other guidelines which come into play, like if we're doing the down payment assistance programs through Florida Housing, they can't do single wides as far as I know, and double wides have to be built after 1994 if they're doing down payment assistance. It's a lot to remember. We have charts for all this.
Yeah, mobile
Um,
homes are hard.
I know we have some
So-
other agents on the call. Any other agents have like any questions, or Crystal, if you have any others as well?
I'm looking at list reports. Somebody else can go ahead.
Okay. John, do you want to, if you have interest rates on some of those slides, you can pull that up, and we can also talk, John, you had a transaction where you had to flip it from FHA to conventional. And that was on, I believe, a bond loan, and the borrower, like, is a W-2 employee, if I remember correctly, and they also had Schedule C side business, which they took a loss on. And John flipped it from FHA to conventional, because conventional, if they're a W-2 employee, like a nurse working somewhere, or a teacher, and they have a side job, which they take a loss on their personal tax returns on their Schedule C, we don't have to count that loss against them. But for FHA, if we have to provide tax returns, we have to count that loss against them. So we're working our way through the challenges that come up during the process.
Yeah,
Yes.
and the team and I were talking about what that means for a lot of buyers that want to cancel contracts. You know, a lot of agents are talking about a lot of their buyers canceling over small things. So, you know, that's something to consider with them, and that we can go over with them is hesitate before canceling on a contract for something small that might be able to be worked out because we locked you in at this rate, and now,
Yeah.
2 weeks later, it's this rate.
Uh-huh.
So certainly something to kind of seek more information about and push to see, can we work this out with the sellers and get something together to keep this deal together? Because yeah, the rates are so crazy that it can make them a huge difference on payment. Canceling this one, oh, I'll go under contract on the same price home, I'll find one in a couple weeks. That can make a huge difference. Over to you, John.
Everyone, good morning.
Good morning.
Hope everyone's having a good Friday so far. All right. And per Brittany and also Gabriella's suggestion, we will be doing it from the full slide version. So what I'll do is this. I'm going to hit a slide, hit my little quick information on the slide, and then whoever wants to chime in, ask questions, do an addition after that, just go ahead and speak it, put it in the chats, whatever you need. We'll be here to service you guys. But I did just create this while you guys are talking just now, just because I know Crystal had some questions about it.
Thanks, Jonathan.
Monthly payments. You're welcome. And I'll shoot this to everyone, all these slides once we're done. I can easily put together these spreadsheets. I'm pretty sure other people on the team can do it as well. But this to me makes a little bit more sense than putting a rate on there, but just putting purchase price, 5% down. This is what you're roughly looking at when it comes to monthly payments, so that buyers be able to know. Of course, having an application completed for them, a lender running the exact numbers is going to be the best. But if we're just looking for just quick numbers on where they're possibly at right now for buyers, these are quick numbers for them. So 5% down, 300K, about 2,600 a month, all the way up to 500K, probably about 4,300 a month. 20% down, 300K, probably around 2,100 a month. And then 500K is probably going to be around 3,400 a month. And so I'll send this over to you so that you all can be able to have some quick numbers. Any questions or in addition you'd like to add to the slide, anyone?
I'm impressed you're able to whip that up that quick. Nice job.
Thanks, Sean. Just here to serve. All right. Next slide, which is normally the first slide, but I want to put that slide in first because it was relevant. All right, this is the rates over the past year, and this is not exact. Rates are going to change once again from buyer to buyer, whether the buyer is putting down 5%, 20% down. In all honesty, we always recommend 15-year over 30-year. If a buyer can stomach the payment, 15 years is going to save them hundreds of thousands of dollars in interest over the life of a loan, rather than going with 30-year. And it'll also give you a cheaper rate as well. But overall, as you can see, the past year, we start off around 3%. People were so happy. And if you guys remember at the beginning of the year, there were buyers that were like sometimes trying to wait. They were saying, hey, I want to see if it's going to go down even lower. Well, as you can see, it has not gone lower. So if a buyer's motivated, it's always the best time to be try to buy right now, because you could end up in a situation like right now where rate has over doubled more than it has over the past year. Any questions or recommendations on this side?
We keep getting questions, how high could rates go? You know, I checked with our secondary manager who doesn't have a crystal ball, but he was saying, you know, he could see rates going north of 8%.
Yep.
Yeah. And yeah, I mean, it's hard for me to wrap my brain around that. However, I guess I'm getting more used to it every day because, you know, we're getting, you know, closer. So we just need to, like John's saying, look at other options. If they can do a 15-year fixed, you know, that'll potentially knock off, you know, take them from 6.875 maybe down to 5.875. I actually haven't priced a 15-year fixed out in a while.
Yeah. It's still fun to deal with sellers on the real estate agent side. But if any real estate agents out there dealing with buyers, which I highly recommend agents still deal with buyers, as soon as rates drop 0.5%, 0.75%, which it will happen, whether it's next month, 2 months from now, 3 months from now, 4 months, it's going to drop 0.75%. Buyers all of a sudden are going to start calling, reaching out, et cetera, trying to get in on the lower market. You know,
they were saying that rates, like the guy we listened to, Barry Abib, he was predicting that rates should come down the last couple months of this year to you know, the first quarter of next year. Now, he of course doesn't have a crystal ball, but the inflation numbers should hopefully get better here in the coming months. Hopefully, I'm saying.
He doesn't have a crystal ball, but we have a crystal tip on our call today.
I wanted to ask you if we are advising buyers that, you know, let's do a 5-1 ARM at 7% because I like even numbers. At what point do you say, hey, it's probably a good idea to look into refinancing at a lower rate? Like when rates drop down to like, and I know this is in the future, but guiding our clients, you know, if rates start to get to like in the 5s 3 years from now, you should probably look into refinancing then. Because I know if it drops like 0.25%, it's not advantageous monetarily to refinance, but 1% of a difference, 2% of a difference, does that make a huge difference to a buyer?
And the higher the loan amount, the more impactful that's going to be. Like if you a 1% difference of a $500,000 loan amount, that's going to be a much bigger change in the monthly payment than a 1% difference in an interest rate at a $100,000 loan amount. And the 5-1 adjustable rate mortgages right now are still in the high 4s compared to the 30-year fixed at 7%. So, you know, I mean, if they do a 5-1 ARM and they're locked in at 4.875%, you know, I'm going to, if that's me, I'm going to ride that out for the 5 years, most likely, unless rates are in the 4s, you know, at some point during that time frame.
Yeah,
I like
can add on
ARMs. I don't know why they're not used more often. They can be a significant savings to the buyer.
Yeah, people are scared of the name ARMs because they think that's what caused 08 recession. What caused 08 recession was people having no equity in their homes. And so when things got bad, you know, they couldn't sell their homes and get a little bit of a profit. Everyone was getting, you know, being really hit when that happened. But ARMs are not a bad thing, in my opinion. Still, with most buyers of mine, I'm not out there recommending it to them, but if I notice a buyer's kind of savvy or they mention it, now I do let them know that, hey, this could be a potentially good option for you. The main thing about it is, and I recommend this to all my buyers, like once a year, do a real estate / mortgage, like this is where I'm at as a buyer or seller.
/ home insurance.
/ home insurance. Unless you're on some 15-year and you had a, you know, 2.125 and you just have thousands of dollars of cash saved up in the bank to where you're not trying to think about that. You're trying to think about these other assets, the other businesses. Just once a year, this is your biggest investment is your home. Once a year, getting a mortgage pre-approval or getting a mortgage, you know, all right, this is what interest rates are looking like. This is what it looks like if I were to potentially sell my home, if I were to potentially purchase a new home, if I were to potentially refinance. Because even if interest rates don't drop, but home equity goes up for that buyer and it's a year later, that buyer could potentially save $200, $300 a month just by going from, you know, having mortgage insurance and now not having mortgage insurance. So If some buyer has less than 20% down, if they're on more than a 15-year mortgage, et cetera, if they're potentially thinking about moving in the next couple of years, I say once a year, January, February, just getting some numbers ran to know exactly where you're at. Does that make sense?
Yes, good info.
Good. Anyone else for this slide right here? All right. Wanted to hit this. This is what Shawn was talking about. Some of it may fly over your heads, but the main thing to understand is there's a monthly inflation number that happens. Let's say it's 8.2% right now. And they total up all the last 12 months to give you your inflation number. There's a lot of different inflation numbers, but this is the basic one that we're going to be looking at for how inflation works. And so inflation is going to be the biggest driver of mortgage rates. Before we were in this inflation situation, a tweet by a president could have thrown off mortgage rates. How much the Fed was buying could have thrown it off. Nowadays, it's mainly going to be inflation was going to continue to drive it. As long as it's at 8.2%, 8%, or even higher, it's going to continue to drive rates up. That's what the experts are saying. I'm not an expert, but that's what they're saying. So if you look at this chart, the main thing to look at is this is what Barry was talking about, is September of last year, 0.3%. That was a very low number. And so what's going to happen come next month when they tally up all the totals from the different months from the past 12, we're going to be reading a 0.6% versus a 0.3%. So for him, he's saying that the smallest numbers are dropping off now. And that means that when they start tallying up those numbers, if we come in with lower numbers on 2022 for the end of the year, we could see the inflation numbers start to drop a little bit. It doesn't look like it's going to be dropping a ton. As you can see over the past few months, it's been 0.6, 0.6, 0.7, et cetera. But they're hoping by the time we get into November, December, if we start coming in at readings at 0.2%, 0.3%, et cetera, it can start showing a slightly lower inflation, which when it comes to these markets, it's all driven by fear and it's all driven by emotions. So they see inflation start coming down, they'll start investing more in these longer things like the mortgage-backed securities, which will end up leading to hopefully slightly lower rates come the beginning of next year. I don't like doing things that are this technical, but I was just trying to give some hope potentially for come January, February next year. Does that make a little bit of sense? Any questions or in addition, something anybody want to say towards this slide?
You did good.
Thanks. And since we're getting towards the end, I did have some down payment stuff that was asked, if we had time to go over, but we don't have much time right now. So I'll put this on there. Every month, myself, Gabriella, and we sometimes have guests as well. We go over kind of like data, things that have happened over the past month, et cetera, kind of like this weekly call, but in a full month. And I shoot out to my database to go and check it out. But this is one of the slides that I always put on there, and I really want agents to be able to see. I showed this to another office this morning, and they were pretty surprised at how this data works and how it looks. But you're going to hear all the different numbers out there. But when you look at it, this real estate game is very cyclical. So active listings, and this is national data, by the way, and this is going to drastically change from the South region to the Midwest, to the West, to the Northeast. When I mean drastic, I mean these numbers are completely different from region to region. The good thing about the South, though, is that these numbers parallel what's happening in the South. So even though it's national data, the South kind of parallels what's happening nationally. And on the left, as you can see, the orange line or yellow line, the yellow line is 2022. So active listing count, it started off lower. It started raising up in the middle of summer, which happens every single year, except for the blue line, the light blue, that's COVID year. So we're disregarding that year. But every single other year, there's always an increase during the summertime, and then it kind of slows down a little bit, and the listings go down over the last couple months out of the year. So yes, there was a very sharp increase that happened in the news. You probably heard, oh, listings, so many listings. But as you can see, it is tapering off like it normally does, and it'll probably do the normal shape that it does the other years. And to the right, days on market, to me, this is one of the biggest numbers that we can ever look at. How long is it taking for homes? How much inventory do we have in the market to where if, every home were to go on contract, all the homes would be off the market within a certain amount of time. And as you can see, it normally drops down at the beginning of the year, and then it increases towards the end of the year. And yes, it has been increasing, but it's not astronomical yet. We're still less than 2 months when it comes to inventory on the market, which if you would ask somebody 3-4 years ago, they would have said 2 months inventory is a crazy low amount. So understand this data, the market is changing. I see more of a seasonal change. Interest rates and buyers are affecting that though, so we'll see how that goes over the next few months. But in my opinion, it looks as if it's still.
Jonathan, you're getting really staticky.
And we can go over the previous slides that you skipped through, John. Let's just do that next Friday for everybody. All right, we're losing Mr. Johnson.
What's up?
We can't hear you. I just said, since we're just past 10:30, let's make sure, let's go over the previous slides that you skipped over next week on the down payment assistance products. Just get a little more details on them. So the agents have, a little bit more in their hip pocket to share with their clients.
Sure, you got it. And I was going to say about everyone.
All right, thank you. You're still cutting out. Thank you, everyone. Thank you for joining the call. Get a hold of any of us over the weekend. If you need any buyers pre-approved, we're here for you. And let us know how we can help.
Yeah, thank you guys for coming on. Have a great weekend and let us know what we can do.
Thank you.